Well, good morning, everyone. Thomas Montgomery. It's a beautiful Monday morning, August 28th, 2023. We get together with our distribution partners and now our clients most weekday mornings at this time to talk about strategies, tips, techniques, share success stories, and support each of you. Today, our topic is on some best practices from a branch operations perspective. So these are not requirements or must-haves or must-dos, but we wanted to share with you what we see that some of our most successful branches are doing, and you might want to consider doing the same. Angel is one of our new branches. She came on earlier this month. She's successful in the auto industry and decided to stick her toes in the water and become a branch, and appreciate her contributing a quote for today's training. But let's go ahead and get into the branch best practices. And I think without question, if you read any management books or sales books, what you would typically see is that goal setting is important, because goals gives us some structure of what we're trying to accomplish. It gives us something to reconcile against to see if we're on track or not, versus just kind of floating out there and seeing what happens. So we do encourage you, as many of you already are doing, is to set a monthly income goal. So certainly you could plan that from your overall streams of income, but specifically regarding what we do together as branches and helping clients with credit and funding. Probably the easiest and possibly the best way to approach this is just simply to set a goal of helping one client a day, one new client per day. Because it's easy, right? You get up in the morning, you know you're at zero because you just woke up. By the time you wrap up your day, it's pretty easy to think back, okay, did I sign a client today or not? It's easy to keep track of. And there'll be some days that we'll have multiple clients enrolled, and some will have a goose egg on. But in general, that's what we see as a best practice. With that, we know that the average client is worth $12,000 to your branch. But let's dig into that. So, of course, that's coming from two parts: the refundable setup fee, and then secondly, the performance fee. You can change the refundable setup fee from the base of $2,000 to more or less. You can change the performance fee from 10% to more or less. But in terms of accounting principles, if you went and signed a client up, so let's take one of you. Have Eric on the phone this morning or on the Zoom. So let's say that Eric signed up a client this morning. Eric could literally go to his QuickBooks and put in accounts receivable $12,000. Now, that doesn't mean that Eric's new client owes him $12,000 immediately, but that's the value of that client on paper per the contractual terms. So sooner or later, Eric is going to receive $12,000 from that client in terms of the refundable setup fee and in terms of the performance fee. So don't confuse that with how much the client owes Eric now. The client doesn't owe Eric $12,000 yet, but from an accounting perspective, there's two main methods of accounting: cash accounting and accrual accounting. Cash accounting means that you count the dollars once you've received it or spent it. Accrual accounting is meaning that you record it once it is committed. So in this case, Eric signed a client this morning, signed a normal deal, $19.99 for the refundable setup fee, 10% performance fee, client guaranteed, promised to work with Eric to raise at least $100,000. So literally, ethically, legally, properly, Eric could go to QuickBooks and record a $12,000 accounts receivable from that client, because that's what the client is worth to Eric's branch minimally. Now, of course, if you increase your price structure in your contract that would alter how much a client is worth. So just don't confuse the two concepts. What we're talking about here is, what is a new client worth to your branch on paper, and it's appropriate to record that in your financials, even though the triggers for the client to pay you may not have been reached yet. So if we go with the average of a $2,000 refundable setup fee and a 10% performance fee, then this is accurate. Of course, there's more days in some months than others, but just for average, we could look at 30. And if we take 12,000 times 30, unless my math is off, we're looking at 360,000 of monthly gross income. Now, gross income is that, right? That's what's called top line. That's how much that your branch is expecting to receive from the executed contracts in that given month. That does not mean that all that money comes in this month, right? Let's look at the performance fees. Clients pay your branch the performance fee after each tranche of capital. So some of their capital may not come in this month. It may come in a subsequent month. Another important concept is that your branch will have expenses. Every business has expenses. And so if you are paying yourself payroll, if you're doing any marketing, if you have a company car, and so forth. So what we're not saying is that, oh, you've booked 360,000 of gross income and that'll be your net profit. That's unreasonable, right? Businesses don't have 100% profit margin. That's unreasonable. There's going to be expenses. But from a top line perspective, if you set a monthly goal, that is a best practice. And if you set it as one client per day, it's an attractive amount. Anyone have questions on this first best practice before we go to the next? If so, just type it into the Q&A box of Zoom. It's like a chat box. Okay, moving forward. Second best practice. I'm sometimes concerned, so I'm not placing judgment, but I'm sometimes concerned when I try to reach out to some of you, branch owners, and it's tough to reach you. Now, I realize that we're all busy and so forth, and hopefully you're talking to other clients, but I would suggest that you might have a business phone number that is a nice professional phone presence. So let's look at our business first. So we do use Ruby.com. I don't have any financial interest in Ruby.com, and I don't get any commissions by you using Ruby.com. So there's no ulterior motives. But you might want to consider taking the same approach that we do. So we signed a contract with Ruby.com. Our main phone number, 903-200-8781, is forwarded to Ruby's switchboard. So they have lots of people that can answer those incoming calls. Now with Ruby, you can tell them what you want them to do. Do you want them to just take a message? Do you want them to do a warm transfer? Do you want to help have them help clients sign up? So in other words, it's more than just an answering service. You can give them tasks that they can do, or they could filter. If it's a current client, they could send it to person A. If it's a prospective client, they can send it to person B. I'm not telling you that you need to use a professional phone service, but I'm concerned that some of you either are using cell phones and the voicemail's full, or you're busy and you can't answer. Now, again, I have a cell phone too. So if you call my cell phone, I might not answer my cell phone because I'm busy or what have you. That's not what we're talking about. But we're talking about having a business phone number that is answered for your primary incoming calls. So I encourage you to consider that. And then with Ruby, you can set some filters. In addition to telling them what you want them to do with incoming calls, you can have live phone answering 24/7, which frankly, we don't. We pay Ruby to answer our phones live Monday through Friday, business hours. But you certainly could have them answer whatever start time, end time you want on a given day. The rest of the time, it just drops directly into voicemail. But some of you are tough to reach. And if you're tough to reach from us, I can only wonder how difficult it is for clients to reach you. And again, these folks, one of the things that Ruby does is they take a professional approach. They'll even be a bit chatty with your callers, which kind of makes them feel warm and fuzzy. And I guess I'll just leave it at that. Please step back and be thoughtful of what type of impression your main phone number is giving to your prospects and even your clients when they call in. And if it's not really very good, you may want to consider signing up with Ruby or doing something different so you look and you sound professional. Any questions on that? Timothy's asking cost. And again, I'm not a Ruby.com salesperson. It'll depend upon what you want them to do and how many call volume, because essentially you're buying minutes of time from their staff. And so the more you have their staff do per call, the more it's going to cost you per month. They do monthly billing. And of course, the more calls you receive. So we pay in our world up to $10,000 a month for our Ruby, but I suspect that yours would probably be just a couple $100 a month unless your volume's really strong. But keep in mind, we were just talking about if your goal is to enroll one client per day, we should be at least ramping up where your branch is recognizing over $250,000 of monthly income. And if that's the case, don't be short-sighted and just say, well, I need to pocket $250,000 profit in my pocket every month, or this isn't worth it. There's probably going to be some expenses. And if you spent a couple $100 a month to look and appear more professional, you wouldn't hardly even notice it coming out of a big budget. And it makes you look a lot better and gives people more confidence. Now, in our world, we have Ruby, but we also use other lines for outbound calls. So if someone calls us on one of our outbound numbers, then they don't get the same experience, but our main number is forwarded through Ruby. Any questions on that? Other questions on that? All right. And I'm sure Ruby has competitors. And again, I don't care what you use. I'm just encouraging you to be thoughtful of how the perception that you leave with others when they call you on the number that you give out. All right. Now, booking deals as signed kind of fits back into what we were talking about with numbers. So we want to run your branch like a business. And I encourage you, don't require you, and again, I don't sell QuickBooks, so it's not like I profit if you use QuickBooks, but I would encourage you to use QuickBooks or something like QuickBooks to manage the finances of your branch. And similar to what we were talking about earlier, each time a contract is signed, we're going to call that posting a deal. So we'll go back to the example before. So Eric this morning signs up a client. So Eric needs some way to keep track of his clients, which of course he does, but this theoretical example, and he needs to keep track of how much the client owes him. I would encourage you to consider using QuickBooks. And so each time a client signs up, you're recording that transaction as an accounts receivable for the reasons that we mentioned before. So when you do this, it builds the value of your business. We have one branch who's not on our call this morning, unfortunately, but she's been a client with us for quite some time. And her funding, we were successful in getting her an initial tranche of funding, but the ultimate amount that she wanted, or still wants, she didn't qualify for because one of her 3 C's, not credit, not collateral, but capacity. her business wasn't showing enough cash flow to qualify for the amount of funding that she needed. So she came to us and said, hey, I want to be one of those branches. So we signed her up as a branch. Last week, her first week, she brought in $10,000. And so now all of a sudden it has fixed her problem to become fundable, because while her core business wasn't cash flowing well, we've immediately fixed her cash flow problems. So now she has that other seat. Well, in addition to that, if you're using QuickBooks to post your deals, whatever business entity that you're running your branch through becomes more valuable because there's more money. Just think about it for a moment. Take your business, and if you were showing $360,000 a month in gross income on your business financials, don't you think that that would increase the value of your business? Don't you think that that would increase your borrowing capacity if you wanted to borrow money? And that is AR, which we were just talking about, accounts receivable. And so accounts receivable, as you probably know, can be pledged as collateral for funding. I was working with Eric and Veronica, they're partners, and you can even take your accounts receivable and you can factor those. So you can turn those into money now, even though the client's not paid you. So there's many benefits of running your branch like a business, and using some sort of accounting software like QuickBooks is certainly one of the best practices. The other aspect is to keep in mind that when a client signs your contract, and we've talked about this a bit, but I'll spin to a different element of conversation, that there's two amounts that the client owes you from the moment that they've signed. Now, they may not owe you the money at that moment, but the executed contract does generate a receivable from them to you. That's for the refundable setup fee at whatever amount you've stated in the agreement, and the performance fee. If you go back and look at the way the contract is written, these amounts are owed to you even if the client ups and quits. It would be a breach of contract on their behalf. So when you start to look at this differently, that once you have a client under contract, you are now owed the money. You should track that money properly, and that money is going to come to you, frankly, even if the client fails to participate because they're under contract. All right, collect on every deal, which kind of blends over. So what happens if you have a client that fails to participate? Well, they still owe you according to the terms. Now, the whole concept of a written contract is it clarifies the responsibilities and obligations of all parties. Now, in your agreement, there's two parties. There's you, the branch. So your agreement tells the client what you promised to do. And then it also states what the client has promised to do. Well, if you're using our standard contractual template, the client has promised to pay the refundable setup fee. Now, of course, that can be financed over time, but they promised to pay it. And they've promised to participate to raise a minimum of $100,000, pay 10% by default of performance fee. And so each client has promised to pay nearly $12,000. The point here is you should collect on every deal. So even if the client doesn't continue to participate, they still owe you. And that's a tough concept for some people for some reason, but it's a written contract. It's honorable, it's professional, it's why written contracts exist, because it clarifies what both parties have promised to do. So if you have a client that doesn't continue to participate, you'd probably want to send them a demand notice to alert them that there's a breach, give them a chance to resolve it, because we want to deliver value. We want to make that $12,000 per client, but we want to deliver value. So if the client is not participating, normally you'd send a demand letter and ask them to comply, to resume participation. And if they don't, then you have some options, which is where we're at with the bullets. You could do just like we do. If you have a defaulted client agreement, you can turn around and sell that. It has value. Now, it doesn't have as much value as a client agreement that's active, that's in good standing, but you could certainly sell your non-performing contracts. And or you could motivate them to pay by reporting on their credit. So we can do this for you, of course, through our litigation process, but you could do the same thing. You can get set up, as we've gone through with Experian, Equifax, TransUnion, Dun & Bradstreet, Experian Business, Equifax Business. So there's 3 primary consumer bureaus, 3 primary business credit bureaus. But if they don't pay as agreed, you could also first threaten them. I don't mean that negatively, but let them know, hey, if you don't pay, it's going to report negatively. And then you could turn around and report it on their credit. Now, not everyone's motivated by that. People that have horrible credit may not be as impacted by people that have better credit. But there's ways to do this where it won't come off, because you'll have some people that say, oh, I'll go ahead and put on my credit. I'll use credit repair, credit sweep, or something to get it off. There are some secrets to the trade that would prevent that from coming off. They wouldn't be able to scrub it off without paying for it. So that is another option as far as how to handle clients that don't pay as agreed. And then the third element is you could sue them. And again, we can do that for you through our litigation program, but you could do the same thing. So again, if they breach the agreement, you ask them to participate, you ask them to comply. If they don't, then you could sell the contract. You could let them know you're going to report it negatively on their credit and then report it negative, or we can do that for you. And or you could tell them that you're going to sue them and then sue them, or we could do that for you. So what's the point? When to collect on every deal. Best practice. Last of the best practices is to get active and visible in your community. So we're not saying that everyone has to do this or any of these items, but it's just best practices. So what are some common items? And there's many other bullets that could be added, but what are some things that you could do to be active and visible in your community? You could go join your local chamber. But what we wouldn't say is don't just go pay the $100, whatever it costs to join the chamber. Get involved, serve on a committee, serve on the board, serve on the welcoming committee, the ribbon cutting committee. Be involved. Just having a name on the chamber roster is passive, but get involved. Ideally, serve on the board of directors of the chamber. So it positions you in a more influential way. You can also become a SCORE mentor. I did this when I was kind of getting my legs underneath me. So you can go to score.org. You can sign up and be one of the SCORE mentors, where you're working with small businesses through SCORE. And with SCORE, now you're not paid. It's a volunteer method, but it's a great credibility builder and provides a lot of exposure. You could become an adjunct, or even, I guess, full-time faculty member and start teaching business classes at local community colleges or local universities. Again, that's a nice credibility builder. It builds your resume, puts you in the perception of being an expert in your field. And quite easily, you could just go out and start teaching. You could teach credit and funding workshops just at community centers, at churches, at chambers. You can do it in person or online. In person tends to be the most impactful. But what this allows you to do through any of these means is become more well-known in your community as a knowledgeable go-to resource on the topic of credit and funding. And of course, our contact us information is here. And this is what I was talking about. When you call this number, it's answered during the day, Monday through Friday, live by Ruby. And then they can either take a message or forward it to whomever on our staff is the appropriate receiver of the call. All right, so let me make this a bit smaller, and let's discuss, have kind of a round robin discussion of what are your thoughts about best practices? What are some things that you can do as a branch owner that would help you be more successful and be more profitable? What's your feedback on setting goals? How many of you have set a goal for the month of September? Now, I know it's only August 28th, but September is just around the corner. So we have a bunch of you on training, which is great. So Andrea, if you can type in, what is your goal, your income goal as a branch for the month of September? Bernard, can you type in yours? And I'm not going to share it with anyone, but I'm asking for feedback. Brenda, what is your goal as a branch office in the month of September? Same for all of you. Charles and Cherie. Cherie, welcome to the call. Darren, Eric, James, Jeanette, Jasmine, Ken, Khalif, Kimberly, Lon, Madison, Nicole, Pauline, Fu, Ron, Sonia, thank you, Mr. Connell, and others. So you can approach it one of two ways. What Terrence said was he went in with one client per day, and that's fine. So that's one way to look at it. The other is to turn around and look at an income goal. There's obviously a correlation, a positive correlation between the two. If you're coming up with the number, then divide that by 12,000, and that'll tell you how many clients you need. Or you can decide how many clients you want, multiply that times 12,000 times 30, and then that would get your monthly income. But it's important to have a goal, and then every day kind of monitor, are we on track or not? Because there's really not that many moving parts that would keep you from hitting your goal. The first goal would be, do I have enough leads? And if not, let us know and we can resolve that, because there's many entrepreneurs wanting and needing capital. So if you have enough leads, then the next reason that you wouldn't hit your goal, if you're not, would be your conversions are off. So in other words, you've got leads, but you're just not very good at getting them enrolled. And if that's the case, we can problem solve that and resolve that. And then the third and final variable is, once the lead has converted, in other words, they're a client, are we doing a good job interfacing with them and helping them through the process to raise capital? So those are the three elements that could happen. All right, well, we're running a bit long, so I'm going to let you go. We've covered some important best practices, and I encourage each of you to be thoughtful. I emailed thoughtful on this topic. I emailed each of you this morning some resources, so you have those. Check your email. If you don't see those, let us know. We're here to help. Have a great day, and we'll talk to you soon. Bye-bye.